Hey, so have you checked your electricity bill lately? Because Singapore's electricity tariffs are at a record high. Yet, there are still some retailers offering fixed rate plans at much lower rates. So, is this the time to lock in or should you wait it out? It's a Money Talks podcast with me, Andrea Heng. So, what's behind the latest spike in electricity prices? And does it make financial sense to switch to a fixed rate electricity plan? Well, joining me now to talk about it is David Broadstock, partner at the Lantau Group. Welcome to the podcast, David.
Thank you, Andrea. Happy to be here.
So we know that electricity tariffs are reviewed every quarter.
Yes.
Based on the gas prices in the first 2.5 months of the previous quarter. So it's kind of like a rolling thing, right? So for those who are still trying to wrap their heads around this, can you perhaps give us a quick little explainer of why we're seeing record highs right now?
Singapore has a very unique mix of fuels that are used to create electricity. Currently, it's about 95% natural gas.
Mm-hmm.
A few percentage points go to solar and then other things distributed. But that concentration on natural gas is really quite unique. This makes us different from other countries within the region, Malaysia, Indonesia. They have more balance, and so they have a lot of coal, some hydropower. This means that the prices of the fuels, like gas, impact those countries differently than they do Singapore, for example.
Right.
For Singapore's context, it means that we're entirely exposed to what's happening in the price of gas because we burn gas in order to make electricity. And then, of course, we need to put that in context with what's happening, not just recently, but ongoing even today. There's a crisis in the Middle East, and this crisis is not focused on oil and gas, but oil and gas is central within that crisis. It's a firm atmosphere of deep uncertainty. It's not just a regular type of shock or uncertainty. Commodity markets are always moving around.
So, taking a look at the new tariffs, we have our own grid operator, SP Group. From what I understand, SP Group is charging 34.78 cents per kilowatt hour after GST. But we are still seeing retailers advertising fixed plans, and those fixed rates are in the 27.5 to 29 cent range, so well below the 30 range. Why are we seeing this gap in pricing? How is it that SP Group is charging one rate and the fixed rate plans can go well below 30?
There's no very simple answer to that question.
Okay.
There are answers, the mechanics, which make sense, but
Okay.
it's nothing's very simple.
Sure.
Now, the simplest way to appreciate it is that the tariff rate is calculated in a way that is different from the way that the independent retailers need to set their own price.
Got it.
So there's nothing which mechanically forces them to be tied.
Okay.
But there are market pressures and market forces which make sense for them to stay fairly close. If you're an independent retailer, why set your price far below the tariff rate? If you're able to do anything better than the tariff rate, then you'll be attractive to customers because they can save money one way or another.
Correct,
right?
yes.
So why the big wedge at the moment is a really interesting question. But I think this just displays a degree of comfort with that the retailers have, the independent generating companies and retailers have with the price points being where they're offering at the moment. And, the context is kind of along the following lines. The tariff rate is set on the basis of those previous 3 months and the 2.5 month fuel costs,
Yes.
the gas prices. They've been elevated, we know that, and it takes time for them to come through. 3 months, we know that, so we knew that they were going up. We can spot those prices, and we know that they haven't gone down in the latest 3 months as well, so everything is as expected. Are we likely to see them go up much further is a good question to pause on for a second. I don't think so as well because of that whole issue of supply chain rebalancing. There's a degree of stability which wasn't there 3 months ago, 6 months ago. And following the energy crunch and the crisis which occurred in natural gas markets several years previous. We saw very difficult times within the power sector, and we saw retailers exiting the market because they were suddenly facing procurement costs for natural gas that were just untenable. They couldn't afford to do business. A few weeks and they would just undo all of the profits they made over years.
And it wouldn't have been enough for them to pass on those costs to the consumer. It just wasn't
that's right. And
work.
Those that were facing wholesale contracts, consumers can choose to take time of day pricing through the wholesale contract. People were suffering, and that was a big problem at the time. It's still a potential problem, but less of a concern, because following that period, the government did many things. The regulator looked at the market and said, well, we appreciate that prices need to move because that's natural within markets. And for independent retailers, it gives them an opportunity to do good business, do good trading, and then they can potentially gain a fair profit.
Okay.
And offer lower prices than the tariff rate, and everyone's happy. The consumers benefit, the company's happy. But the spiking and the volatility in the prices were just too high. So the government stepped in with requests and rules to encourage the retailers to think further forward, to conduct hedging in a much more serious way, so that they had to think about, where's my customer base?
Yes.
And how much fuel do I reasonably need to have to cover the majority of that customer base for the next few years, the next 2 years or so. And because of this, the retailers have a price base that is much more controlled today than it was in previous years.
Understood.
And so their cost of business is pretty stable now.
Yes.
They know what they're going to be facing for the next few years. And then they're positioning expectations around the margin that they don't hedge. And the long-term expectation can move more rapidly than the tariff can. So, there's fundamentally different mechanics between the two. And it's a very interesting and positive signal in some ways. It's confusing when you look at the tariff, because you're questioning, why does the tariff go so far beyond what the retailers seem to be happy with?
Correct.
But on the other side, it's very encouraging, because it means that the policy mechanisms which were put in place to create stability for those retailers for the benefit of the consumers seems to be working.
So it was all about looking a little further far forward to remain sustainable. Is there a catch for the consumer, though? Is there something that we need to be wary of when we're signing on to these fixed rate contracts?
No, I don't think so. I don't think there's, like a hidden catch or anything like this. I think, if you buy into that idea that this is a revealed signal by the market, it's not just one retailer, it's the market itself pretty much. Everything except for the tariff rate seems to be comfortable with staying at that point. And why do they now stay at that point if the tariff has gone up? Well, it's a good opportunity for them as well. It's very astute business. It gives them an opportunity to encourage customers away from the tariff rate. So that question of switching is definitely something that many households will be considering at this point in time.
For sure, yeah.
And, would that be a risky proposition? I think the indication would be perhaps not. Because if the retailers are all converging on that price point, and we know that the fundamentals are, it's because they know that they can continue to do business safely at that price point. And we know those risks of retailer exit that occurred a few years ago are very well managed, let's say.
Okay.
Then, it doesn't seem so concerning to potentially switch. And, given the way that the tariff rate is calculated and what we see in the market, you can look at the price of gas today and it hasn't really changed from where it was a month ago by any great deal. It's quite stable now. And so that becomes a good indicator of what we can expect.
So if someone signs a fixed plan today, are they effectively betting that electricity prices stay at that rate, which is pretty high, for the next 2 years?
Effectively, yes. But it probably is useful just to remind ourselves on this, that's always that bet.
Sure.
Like, this is not something which would be new in this particular moment. But the idea of the fixed price plan is essentially an individual making a bet against the market.
Yeah.
It's the belief that, I will save money by fixing the price because the tariff's going to increase. And so maybe today it's not that great a benefit, but in 6 months from now, I'm going to feel pretty happy. And so it is pretty much a bet, but it's not quite a pure bet. You have to place behind it your expectations.
Sure.
But there's more to it than this as well. There's one part of this which is just about the speculative look towards the pricing and can I benefit my household income.
Yeah, I mean, people try to do that with interest rates, for example, right? Currency conversions, carry trades.
Yes. Although I'm not sure I'll take household electricity as a sort of tradable commodity.
I mean, I think the concept here is, trying to game the system in a way.
Yeah,
right?
There's a bit of that. I mean, go back to earlier. I don't rush to change my pricing contract because I think there's a very marginal perspective on that. But I also balance it in a certain way, and many households will, depending on their configuration, right? Whether you're a family household, a single pensioner, something like this. Price stability is very good for household planning and budgeting.
Yeah.
And so fixed prices may be something that households choose because they simply want certainty. They know roughly what their income is doing. They know what pay rises they may get with inflation or how their contracts are structured.
I want to talk through a few situations of the different household types. So good that you brought it up. And perhaps discuss whether they should consider locking in fixed prices. So maybe I'll paint you a few scenarios and we'll see how we go from there. A young couple just buying their BTO, expecting stable electricity usage. What would the wiser decision be?
I'm not good in the game of consumer advice, just to throw that out there. But I think that younger family, that's where stability can be very important. If you're just getting into the early phase of your career and you're just getting into purchasing a house and you're beginning to understand what it feels like to have that major household expense, which may be for the first time in their lives.
Adulting,
yes. It's a fun and complicated process. But that's where the budgeting and the stability can make sense. But also, there's perhaps a good chance that these are freshly educated people and they can look towards the market and forge their expectations quite well.
I think it's also deciding on how to allocate their budget accordingly as well, what their priorities are.
Yes. And so, I think there's an important aspect of this, which actually cuts across all household types, which is the appetite for a bet. The appetite for risk. And that appetite, you should develop it with awareness, right? So if you believe, if you do your research and you trust that you are aware of how the markets roughly work,
right,
then you can make pretty good decisions. These markets don't move in a hurry and you can kind of see what's going to happen.
True.
But if you're fairly confident that you look at these things and feel deeply confused, then maybe you don't want to be taking that bet.
Exactly. Exactly. And that's kind of where I sit as well, because it's not so much the confidence, it's more I don't have the time to track these prices, right? So what is going to be the safer bet that gives me peace of mind, essentially, right?
Correct.
So the other household that I wanted to pit to you, quite different. A retiree who lives alone, uses very little electricity. Bearing in mind, though, that retirees today have smartphones. So they do still need a decent amount of electricity, but perhaps their usage is not as much as a family of four like yours would have. So what would be the right move for this retiree?
Well, let's work on the idea, though, that this is maybe a fairly, well-informed retiree, somebody that's still...
Many are,
absolutely, most are. I struggle to find retirees in Singapore that are not, actually, which is very refreshing.
Right.
But somebody that's actually quite savvy with their technology, savvy enough perhaps to, keep an eye on their apps and perhaps even explore another type of pricing, such as the time of day based pricing. Because I think there's another element of this story, which is not just about the fixed rate, the tariff, or a discount off against the tariff, or a fixed rate. Those are options. But there's also the more extreme option, which is to go with the time of day pricing, which a lot of people were on previously, and some people have come back to, and it's still very much an option out there. But it's like an extreme version of thinking about whether I'm allowing things to vary across time.
Exactly. And I think you must know yourself very well in order to go with time of day pricing.
Yes, no, indeed. And you must have flexibility. So this is where I'm going with this one, actually.
Okay.
So you must know yourself well, because you need to, one, be able to have the time to spot those prices and how they're changing. You need to balance your lifestyle around that, or have a lifestyle which matches that, one or the other.
That's right.
And to do so requires also the ability to spot and track those prices, and then freedom to adapt your behaviors. I don't have that freedom. My family doesn't have that freedom.
Yeah.
School is the same time every day.
Correct.
My work, I cannot easily pick up and put to the middle of the night, or shift a Friday meeting to a Sunday, or something like this.
Exactly.
And so there are constraints that some households have that others don't. And those in that retirement category, they actually have a lot more flexibility.
Yeah.
And so they can move around their demand. And so one version of that is from one quarter to another, whether you're on a fixed rate versus a tariff.
Yes.
Could you adapt your behavior? Yes. Another version is, but also within a day, could I wash my clothes 1 hour later or earlier?
Yeah.
Just to avoid high pricing, or to benefit from much lower pricing.
Yeah. Can I watch my live stream videos at a later time because I don't have to go to work the next morning?
Well, correct. Or use the battery on your phone so that you can charge up at night. And
precisely.
Yeah. So I think these are also important elements. And then when we think about those different household types, it really helps magnify the question which matters.
Right.
How flexible can you be? And what is your actual appetite for that flexibility, given that to be flexible, you may also have to spend some time trying to work out how to do things differently.
Yeah. Okay, one more profile that I want to paint for you. A renter who may move within a year.
Yeah.
What's the strategy?
I think when you're renting and when you're in a position of always being free to pick and choose within a 12 or 24 month horizon, just always remain vigilant towards the opportunities. At this particular moment, maybe we'll go to one sort of fundamental point on the pricing. The tariff rate is quite far above where the retailers are offering.
Okay.
And even if it does start to decline again, will it decline rapidly? And how long will it take to get to parity with what the retailers are offering right now? It's difficult to give a clear prediction, but more likely than not, it will be a slow recovery to that point, because the fundamentals just aren't shifting. So, should you look at going towards a fixed price plan? Should you look at the retailers? Certainly you should have a very serious look. And if you're moving, of course, you get that opportunity. It creates a nice reference point. But perhaps for the other households, the audience listening into this that aren't in that category, think like the people in that category.
Yeah.
Don't let yourself become locked into a contract because it feels easy not to change.
Exactly. Because you never know what your status is going to be a year from now.
Correct. And one of the interesting things about people is we like to take the easier course of action.
Who doesn't?
No, indeed. And it's very normal, it's very rational.
It is.
The number of government schemes, for example, that have been put out there to encourage purchases of energy efficient appliances.
Yeah.
Discounted coupon, rebates on certain things. These are put out there by the government, and they're not always adopted as well as they could be.
Yes.
And, I think that mentality of reminding yourself that despite what your household structure is, you should always think like that household that needs to review. And household budgeting is important for everybody at all times.
Are we being penny wise, pound foolish here? Or, because some people will come and say, this feels like a penny pinching scheme. To be thinking about our electricity this way.
So what? I guess.
You're still saving.
There's two versions of this. There's one which is it a large enough impact
Correct.
to really care about.
Correct.
And that, if it's not a big impact, then you can convince yourself at least that maybe it's not. It's always prudent to manage your finances. That much is always true.
Sure.
That's why I was saying a moment ago that idea of thinking like the renter that's going to move is just always a good, smart behavior.
Being nimble, right?
Exactly. There's never a point where that's wrong. But it certainly becomes much more important when the impact is bigger.
Okay, so apart from the kilowatt hour charges, the tariff rates, what else should I, as the consumer, be considering before signing with renewing with my existing contractor or provider, or signing a new one?
So some of the retailers will offer schemes such as vouchers or rebates that complement the contract they're offering. So you get your electricity rate, but at the same time you'll get some additional benefits. Those are valuable to think about, but they're probably not the thing you should base your decision upon.
Okay.
Concentrate on the electricity price.
Yes.
And then those other things, if they're attractive as well, that's a great benefit. But the core decision should be on the pricing. The other thing that is worth considering, but we're going now all the way back to some of the previous conversation, is the ability of the retailer to continue to provide the electricity at that price. And so, if we take everything on balance, across the past 3 to 4 years, all of these policies which have been put in place to create business stability for the retailers appear to be working.
Mm-hmm.
The retailers in the past couple of months, the latest round of price revisions, we see that some have slightly lowered their prices, but not really far.
Yeah.
Now, they were comfortable where they were. Mm-hmm. That's why they were there for the past half year. And the fact that they're still pretty much in that same position means that they're still comfortable.
Yeah.
So there's no sort of immediate signal that they're feeling risk as a business. So then if you as a consumer go to them, you don't suffer the same risk that they might suddenly exit the market that people faced several years ago.
Yeah. So price sustainability is the key here. That was as comprehensive as it gets, and helping us understand why there's a disparity in what we're seeing versus on the bill versus what we're seeing in the market. Thank you so much for walking us through all of this. Thanks very much, David.
Thank you, Andrea.
And thank you to our Money Talks community for joining in the conversation. I want to hear your side of the story now. What does your bill look like? And are you going to switch to a fixed price plan? Or are you going to just stick with your current provider like David will likely do? Tell us in the comments section on wherever you're listening to us from. You can also email us directly at cnapodcasts@mediacorp.com.sg. I'm Andrea Heng, and this has been a very nifty Money Talks podcast episode.